Hey there traders, welcome back for episode number 94 from the StockBandit.tv. It's a place you can always find trading videos to make you better, and welcome back. Obviously last week there was no market view video. I was traveling, and so obviously the free stuff gets the boot. I did continue to serve members over at the StockBandit.com, but the free videos didn't have a chance to do. So back in action this week with a brand new market view video. Let's take a look at the major averages, get a good rundown of the big picture and some key levels there in the NASDAQ and S&P 500 and the Dow. That is what's going to influence individual stocks. And as you and I formulate our trading plans, it's absolutely imperative that we know what the big picture is coming up against or getting through. And so as we approach key levels, as we move through those, whether it's to the upside or the downside, it's really going to help you and I as traders when we go to formulate our trading plan and take a look through the charts and see what's out there for plays. So up first is the NASDAQ. And by the way, last week, a very important week across the board. Each of the major averages marking new recovery highs, meaning their best levels from the March lows. So obviously we've come a very long way since then. For the NASDAQ, this move right here represents 59% and change. So tremendous recovery here off this March low. But for now, in the near term, here's what we had last week. It's very interesting. We had settled into this trading range here for 2 to 3 weeks. I guess about 3 weeks. We broke down on Monday, and all those people who were thinking, finally, this is the beginning of the real corrective action. The pullback is finally here. Obviously, they all just got totally reamed as this market just turned and reversed completely and took out the recent highs. So obviously Friday was option expiration day. We did see improved volume with that, along with the best surge of the week. But the key from this point going forward is going to be follow through, because just as these bears right here got head faked on Monday, the bulls are going to have to produce some upside follow through to avoid the same situation here on the top side. So just because we have broken out here and that we did so on expanding volume, technically that's very good. It's not everything though. We're going to have to see some follow through. So let me just show you one other thing. This is July right here. We cleared this important level in the NASDAQ. The volume on the breakout was somewhat lackluster, but then we did see immediate follow through the next couple of days, which took this market well clear of that resistance level at 1905. Obviously it went on to run more than 100 points during the course of that surge, in spite of the fact that it had come a very long way just off the July lows even to get to that breakout. So in the near term, comparing the July move to current, from the lows last week, we've just rallied this, we've seen this 100-point move here, but yet we still need to see follow through very soon. Now, it doesn't have to be Monday or Tuesday, but it needs to be this week. So let's just see what takes place here and how the price action goes along. For the NASDAQ, though, the next key level to the upside is this same zone that served as some support several times throughout last year. That's at 2150. So we do have considerable distance to climb before we reach the next real important resistance level. Let's see if the bulls can put it together or not. For the S&P 500, we cleared this 1018 level last week on Friday with this excellent move higher. Now closing at 1026 as of Friday. This index, if I zoom out here a little bit on the chart, really the next key zone that we kind of paused at last year before a significant breakdown took place is right here at 1100. So that's really the next key level here on the upside that the S&P could tag. It's got some freedom of movement up to that level. Let's see if the bulls can get it there or not. And finally for the Dow, we have broken out from this very clean channel pattern here. We cleared that 94.37 high, and we're now at 9,500 and change. Obviously volume along with that breakout was nice, but here again we need to see some pretty rapid follow through here, or we could come back and easily challenge this 91 quarter level. It's been serving as both resistance here and support in recent weeks. And zooming back out here on the chart, the Dow The next key zone right here is where we kind of paused before a significant breakdown last fall. That's around the 10,350 zone. So plenty of room to run for this index, which has been lagging behind the others a little bit, but it's starting to blaze a trail here and mark new highs again. So let's see if it can continue that, and if we can see some follow through to last week's strength, and see if these bulls really want control of this market. They've had an excellent run, but they've opened the door once again to more upside, so the choice is going to be theirs in the days to come. Thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.